Good evening. Today we will be covering the post-market analysis dated 30th June 2022. Markets languished in negative territory for most part of the trading sessions and finally ended flat on the expiry day. Technically, from the last 3 days the market has been witnessing non-directional activity. Indian benchmark indices ended flat in the volatile session on June 30th on the F&O expiry day. At close, the Nifty was down 18.80 points at 15,780.30. However, Nifty Bank and Nifty Financial Services showed strength by climbing 0.47% and 0.46% each. The BSE benchmark, the Sensex ended down 8.03 points at 53,018.94 amid brisk selling in frontline blue-chip counters. Meanwhile, the BSE mid-cap and small-cap indices were ended in the red. On the stock-specific front, we have the following: Britannia, Axis Bank, and HDFC Life were among the top Nifty gainers. Starting with the reasonings from general to specific, Nifty FMCG ended down 23.8 points at 37,644. We could see the regional brands, struggling with rising input costs and unable to cope with the pressure on their margins, have passed on the increase to consumers, denting their sales, indicating the reason why FMCG stocks such as Nestle, Hindustan Unilever, Dabur and so on were down today. However, Britannia being the only exception, with the share price spike by 1.83% ending at 34,664 points. Coming to financial service sector, buying was seen in the insurance and banking names like Axis Bank, HDFC Life, ICICI Bank and so on. Nifty Bank Index advances 0.55% in an upbeat market. It was further mentioned in the statement by the RBI on Thursday that the capital to risk weighted asset ratio of commercial banks rose to a new high of 16.7% while gross non-performing assets ratio have declined. On the flip side, Bajaj Auto, Cipla and Eicher Motors were among the top drags, down up to 4.2%. On the sectoral front, Nifty Auto, Metal and Pharma shed 1-2%. Many popular models of M&M and Tata Motors, including Nexon, have months of backlog of bookings as manufacturers have not been able to keep up with the demand, in part also because of a semiconductor shortage, plus the increased price in the level of fuel is further adding to decline in the sales. Hence, we could see the shedding of auto stocks. Furthermore, share price of Cipla was down 3.21%, ended at 2,794 after the announcement about the investment in tech firm GoOptiv. Talking about the recent developments in the corporate segment, we have the following news. JB Chemicals and Pharmaceuticals Board has approved a proposal to acquire 4 pediatric brands from Dr Reddy's laboratories for about 98 crore rupees. The company has inked a pact with Dr Reddy's laboratories to acquire 4 of its brands, Z&D, Pedicloral, Pesef and Easynapi, for the India market. All 4 brands are focused on the pediatric segment in the country with a total covered market size of 1,800 crore rupees. The combined sales of these brands stood at around 33 crore rupees for financial year 2021-22. The acquisition, which will be funded primarily through long-term debt, will be completed in the next few working days. Two-wheeler automobile company TVS Motor is reportedly in talks with TPG Capital and KKR and Company to raise at least $300 million for its electric vehicle business. It acquired a majority stake in Go AG, Switzerland, and its subsidiary, Ego Movement. Ego Movement is a Swiss technology company, with a strong presence across Europe and a portfolio of e-bikes, e-cargo bikes and e-scooters. Recently, the EV segment has seen traditional automobile players in the 2- and 4-wheeler spaces increasingly raise money and make investments to support growth. Tata Motors announced a $1 billion investment into its EV business by a consortium of TPG Rise Climate and Abu Dhabi's ADQ in October last year. Multiplex operator Carnival Cinemas plans to raise 400 crore rupees from Yes Bank to restructure its debt and open new screens. The company last year had said that it was looking to finalize an alliance with a private equity investor to help resolve its debt crisis. The multiplex operator plans to close this debt restructuring within 60 to 90 days. The company has a debt of 800 rupees minus 1000 crore. So, even after the fundraising, they will have a sizable debt. The company estimates its screen count to reach 567 by end of financial year 2023. It also has plans to reach the 1000 screen mark in next 2 to 3 years, which the company initially had aimed to achieve by 2020. Reaching 1000 screen count will be a challenge because first they have to resolve the debt issue and then they can move on to expansion plans. Also, other multiplex players are getting aggressive in terms of expansion. While they will become the second largest player after PVR Inox merger, it is important to see how they scale up from here on. But expansion will be a challenge because of team restructuring. State-owned Indian Oil Corporation will invest over 740 crore rupees to raise the capacity of the nation's oldest oil refinery at Digboi in Assam. IOC board has approved raising of Digboi refinery capacity from 0.65 million tons per annum to 1 million ton along with associated facilities at an estimated cost of 740.20 crore rupees. The project is expected to be commissioned by October 2025. Digboi Refinery's current product portfolio includes LPG, petrol and diesel, fuel oil and sulfur. Thank you for being patient and listening the video to the end. Please do like, share and subscribe the channel for the latest updates in the market. That's all for today. See you tomorrow.